So in this video I'm going to talk about the US dollar index. Basically, the US dollar index is a measure of the value of the US dollar against the majority of its significant trading partners. The index is similar to other indexes such as the FTSE, the S&P, etc. But the only thing the US dollar index does is measures the value of the US dollar against the other major currencies such as GBP, the Japanese yen, the Swedish krona, the Swiss franc, and the Canadian dollar. Now, one of the ways you can use the index dollar is to compare the chart to another chart such as the Euro US dollar. So what I'm going to do is show you the correlation between the two. So this is the current chart of the US dollar index. As you can see, the index is showing that the US dollar has been strengthening. So what we would expect is rest of its trading partners, so for example GBP, the Canadian dollar, the Japanese yen, those should be coming down. So let's have a look first of all at the euro dollar. So here we have the dollar index, or the DXY, which is on a daily time frame, and here we have the euro dollar time frame, which is daily. These two charts, as you can see, are inversely correlated. What that means is if you look at the chart, the way it's going up, or the shape of the chart, and if you look at the shape of this chart, they both are similar but inversely. So in other words, when the DXY is going up, this chart is showing is coming down. One of the ways you can use DXY or the dollar index is to find out when the euro dollar is going to bounce, or when the euro dollar is going to reverse. So if we look at the DXY or the dollar index and we go into a higher time frame, so for example like a weekly, let's have a look. So as we can see at the moment, the dollar index is coming into this resistance zone here, this area here. We can use that to our advantage, because what that would mean is that the dollar should bounce back from here. So in that case, the dollar will weaken and the euro will strengthen. So we should expect a bounce probably around 122 area from the euro dollar to go back up. If it takes out this level on the dollar index, what that would mean is that the euro dollar will fall further. There are a number of ways you can use the dollar index. One of the ways is to see how you want to trade it in respect of, say, the euro dollar or the GBP USD. The correlation between the two is inverted only when the dollar is the second currency. So for example, the base currency here is the euro and the second currency is dollar. So always remember that if the dollar is at the front, then this chart would look exactly the same as this one. So the advantage you have as a trader is you can see if the dollar index is strengthening against all the currency pairs, what you should be doing is buying the dollar. So in other words, you want to be selling the euro. If the dollar index, like it is at the moment, is coming into a supply area or into resistance, then you want to be careful in buying the dollar. So in other words, you want to be looking to get long on the euro, but only once it shows you that it's actually rejecting that resistance level. So to make it a bit more clear, what you can do is wait for the index, so the dollar index, to start coming back down. So in other words, it shows you that it's reacting to that resistance. When it starts reacting to that resistance, you can then look to take a long on euro dollar. Now the trade on euro dollar should be at its own significance. So in other words, just because the index is bouncing back from resistance doesn't mean you automatically buy euro dollar. What you should do is step one, look at the index. When the index is showing you that it's hitting resistance and is dropping back, you should then turn to your euro dollar chart and have a look for a support or a demand level, and then look to buy or get long from there. This is one of the ways we use dollar index. Thank you.